Krithivasan, Chief Executive Officer and Managing Director of TCS, spoke with us on the quarter gone by. Listen
in. In the early part of the quarter, we continue to see the same kind of prioritization of the programs. But as we went through, we realized a much better deal bookings, and also the quality of the deal bookings. And also we started seeing some discretionary projects, some revival of the discretionary projects. All these things put together, most importantly, very strong TCV, particularly in BFSI, in North America, in retail, which are the important verticals for us, important geography. All these things put together, and also some yearly conversations with our clients where we hear there could be a positive upward bias in the budget for next year. They're not frozen yet, still discussion, but there is a positive upward bias in budget is what we are hearing. All these things put together gives us a comfort that CY25 can be better than CY24.
We've seen the last 2 quarters interest cuts happening in the US. That's been positive for companies. Yes, economy has been resilient, 2% plus, growing at a good rate. Labor data has been very robust, which is coming in. Is that one of the reasons also why you're seeing a revival in discretionary spends?
That also, as I said, for us, most importantly, the conversations that we are having with our clients and the deal booking. So, but of course, the other macros also have an important role. But the labor market can cut both ways, right? Labor market tight, if inflation doesn't come down, maybe interest rates won't come down. It can have a negative impact. But at this time, our early impressions are based on our discussions with our customers and kind of deals that we are signing.
There are a couple of headwinds which are coming in, Jan 28 being one, Trump administration coming into play. But it's also positive for some of the manufacturing companies because he's talking about tax cuts, which will drive more spends from the manufacturing side. Healthcare policy, more certainty may come in once Trump comes in. These are some of the areas which have been slow for you, and what kind of expectation do you have for that?
So Jan 20th, I'm not looking at a headwind. Okay, like you said, more clarity will emerge and uncertainty will come down. So which could be a positive for us. And as I said, there is certain expectation in industries like retail and banking already, where there is a positive move towards discretionary programs. So all of them, healthcare is one industry where we are still waiting for clarity on what would be the what new regulations that can come in. But other than healthcare and life sciences, there is some amount of positivity in other industries.
$10.2 billion, I think one of the best third quarter TCVs for you. Give us a flavor of that TCV. Where is it coming from, which sector? And do you see now, you said a revival of discretionary spend coming in. How much of that was built into the $10.2 billion TCV?
So I had already given the exact numbers in the press releases and all. But if you look at, it's a broad growth across geographies as well as industry verticals. Almost all industry verticals, we had an increase in the TCV. Similarly, almost North America had one strong TCV growth. Europe, in fact, had one of the best TCVs in Q3. So it's very broad-based. And in terms of quality of projects also, we are apart from vendor consolidation and optimization kind of projects, which are now which do have a significant presence. As I said, there's a increasing proportion of discretionary work. We are also seeing, particularly in the pipeline, if you look at, there are more projects around technology modernization. As a run-up to leveraging AI, more data projects are coming up. So that's what is giving us confidence and hope. But it's slowly the mix is moving towards transformative engagements than optimization.
You had mentioned and indicated as well that clients were taking more time in Q2 and Q3 to close the deal. Has that improved a bit in Q3, and how do you see Q4?
We did a sample on the deals that are more than 20 million. Based on that, we have been able to see that there is a shortening of the deal cycles. Yeah, good by few weeks, which is significant, and also indicative of the better decision-making environment. That's overall. We need to see what happens in Q4, but compared to Q2, Q3 decision-making cycles have improved.
Your earnings call, a lot of emphasis was put on BSNL. Just want to get a clarity on BSNL because you've completed 70% of the project.
That's right.
How do you see the deal tapering out? And when you say that CY24-25 is going to be better than CY24, what is the kind of order book, optimism that you have that will replace BSNL deal and you'll be able to grow at a healthy rate as well?
See, we expect this to taper off in Q4 of FY25 and maybe Q1, Q2. That will be some tail still, like by then it will taper off. But we do expect that to be replaced by some additional work in India geography or other regional markets, or also the new TCV we are getting in from other overseas geographies. But when I say that CY25 would be better than CY24, it's more from a broader qualitative perspective. We have to we'll find a way to replace BSNL revenue, but general overall qualitatively the environment is much better in CY25.
Do you see your core verticals coming back on full stream to take on the load, heavy lifting?
That's the expectation. But there will be some support that will be provided by the regional markets also.
In FY23, we saw a good TCV win. But the market was disappointed that conversion was slow in FY24. Right. Now FY25 we are seeing a good TCV build up. If I look at the last 12 months, 40 billion odd is the TCV that you have got. Do you see better conversion rate now because of the kind of outlook you have this time?
That is broadly the expectation. Again, that's, as I said, coming from the other indicators like the deal cycle, kind of projects that we are deal up mix and discretionary work. So the mix of these projects gives us a confidence that there will be a better conversion of TCV into revenue.
AI has been one, the surprise element, and I heard you talking extensively on the kind of work that you're doing for some of them. Healthcare especially, yes, I think you've used AI to identify molecules for cancer and others. Yeah. If you can elaborate on that.
See, this is one for a large pharma company. They've been looking at identifying what would be the right. I'm not a biologist, so pardon me if I use wrong terminology. They have been trying to identify the molecules based on the target protein. And so we used AI to first come up with a list of 1300 molecules that could be candidates based on the target given. And we used further filters to reduce the 1300 to 12. Now this 12 is in the in vitro assessment in the laboratories. So this process greatly accelerates the identification of candidate molecules. We believe that this kind of work could not have happened without the use of generative AI.
Okay. Do you see that because of this, there could be an impact on volumes going forward?
No, that's what I'm saying. This is a work that could not have happened without use of. It's a net new work. There is generative AI is going to, while there are areas where it will bring in productivity improvement, there are areas where it will create net new work. So which is going to be positive. There would be some productivity improvement that will happen in it, so which would have a negative impact on demand. But our overall assessment is net it's going to be positive. But as a technology company, you have to be ready. The role of a programmer might change. What are the roles that we have today? We may not have, there will not be expansion or increase in demand for the same roles.
Yeah.
But new categories of roles will come in. but there will be some existing categories, there will be a shrinkage, but new categories will come in. So we have to continuously train our people to be ready for this new technology and leverage it for the betterment of our customers.